believe it or not, this wall thing is related to China. You know, Chinese think a little bit different than we do. We separate all the issues here, but the negotiations over there are based off of how they view a leader and how strong he is. And so if he can't get his negotiations and get a win against the Democrats, or get his wall, then the Chinese view that as a sign of weakness. And they will continue to play him and make promises and string this out and look for extensions, and that'll be a bad thing for the market.
So Dory, that's a fair point. Yet we have not seen a huge market reaction to these developments over the course of the past couple of days. And even with the headlines that we've seen so far late last night and this morning, the Dow futures are indicated to open down maybe 50 to 75 points at this stage. Does this mean that investors and traders are handicapping this with a little bit more skepticism?
Absolutely. I think the market is saying we don't know, which is a fair response. But I think what we can look for is to see this thing play out in the second and third quarter, at least the China perspective, because, you know, we don't know. So there's no reason for the market to overreact any more than it is. A lot of this delay is already built into the market. You know, so if you came out tomorrow and Mnuchin said, hey, we got to deal with China, you're going to see a rally in the market. You know, if he comes out tomorrow and says we don't have a deal and we got to extend, that's already built in.
Dory, over the course of the past year-to-date period, and certainly since the December 24th lows, industrials and energy have been the two best performing sectors in the S&P 500. They were the ones that investors bought a lot of on the dip that we saw. Is it justified, given the outlook for the global economy, with U.S. trade relations with China, and what's happening with the U.S. economy?
Well, I think it is. You know, one of the things I've been pointing out is just looking at the dollar. A lot of people forecast a weaker dollar next year, but I don't see it. I think it's kind of the best of the worst. We've got the best economy than the other ones out there, and we're paying a pretty good rate, and rates have moved up a little bit. So I kind of feel that way about our stock market, too. We had a big correction in December, and there are a lot of sectors, and throw in technology and financials as well, that were very undervalued and still look very good going forward.